Okay, all right. Hey everyone, this is the supplemental video for the 5 pillars of a trading plan on my Instagram. So if you're one of these people that requested it, here you go. So in this video, I'm pretty much going to talk about, how I form a trading idea, how I, come to a decision to take a trade, and maybe this can provide some insight to some of you guys out there. And maybe it's going to help you, maybe it won't, you know, try it out. Okay, so I expect that you read um, the PDF that I sent out, and you should be pretty familiar with these concepts because I'm going to go pretty fast. Okay, so first thing, bias. Where is the next candle likely expanding towards? Okay, now let's look at this example right here. So this next 4-hour candle, we can either expand lower and then continue higher towards the swing high, or we can, or we can reach a swing high and then trade lower and then trade higher again. So those are two things that we're watching out for. And we're not going to take a trade unless one of these targets are hit. Alright, let's let this play out and let's see where the next candle is expanding towards. Okay, you can basically see that we're, almost there. So now let's drop down to the lower time frame. Alright, so one of our situations played out and we expect that we run this high and then make a delivery towards this fair value gap right here on the 4-hour time frame. So let's let this play out a bit slower. Okay. All right. Let's move this here. Okay. Nice. So we can see that we swept this high right here. So now this is our context area. From this swing high to this fair value gap, this is where we're looking to get involved in the highest probability setup. We can see that we've built this low resistance liquidity right here, all this trendline liquidity, right? So people trying to hop on the trend, trying to trade the trend higher, but then obviously, you know, all their stop losses get ran once price begins dumping lower. Yeah. So we can see that we swept that high, and we also made an S&P divergence with ES. I'm just gonna flip between these two indices so we can just check it out real quick. You see that? Look at look at the swing high right here, and then look at this. Look at the swing high. One swept. We swept the swing high on NQ, and then on ES we didn't sweep it. Right? That's really really important. That shows us that we have a bearish SMT put in place at this swing high, a significant level for us. Right? So now our job is to now enter, and that's where our entry model is. Right? So our entry is an SMT divergence, which we have, and now after we come off that PD array in the form of the 4-hour high, it's going to be a 1-minute inversion fair value gap. So the cleanest inversion fair value gap over here would probably be this one. Right? So let's go in here with our limit order, stop loss at the swing high, and what are we targeting? What does our trading plan say? 1 to 2 risk to reward only. The only reason I say this is because 1 to 2 risk to reward is the most consistent thing you can catch in the market. Once you get up to 1 to 3, 1 to 4, it's going to be really hard to consistently catch those. So that's why I only opt for 1 to 2s. So 1 to 2 would be somewhere here. And yeah, let's see how this plays out. So let's wait for this inversion fair value gap to get traded below before we decide to enter. Okay. Okay, so we can see this inversion fair value gap get traded into. We can sell one contract. Um, I don't know how much money we'll make, but this is just an example. You should be following your risk management plan right here. I can't really see how much what the percentage is that I'm risking because I would literally have to calculate that. So just for this example, I'm just going to be using one NQ contract. So let's see how this plays out. Okay, we get tagged in, and our take profit is right here, and our stop loss is right here. Okay, let's see how this plays out. Nice. Now we're in profit right now. Okay, so now we look at our break-even rule. So break even at the first opposing PD array on a time frame greater than the 1 minute. So let's look at the 5 minute for any fair value gaps because those could be opposing arguments. I'm not looking for any swing highs and swing lows on the 5 minute, 15 minute. I don't think they're that relevant. Only fair value gaps are pretty important. So I don't think we see anything here. No. Okay, I think if we don't see anything, we can just break even at 1R. So wherever 1R is. 1R would be at here at 14.25, so let's mark that out. Okay. And now let's see how this plays out. Wow, that was pretty fast. I didn't even have time to check. But you can see how it's so simple to form a trade idea that like it's so easy, man. Like I don't understand why more people don't do it. I don't understand why people just gamble when they trade. It's it's so much more satisfying and so much less stressful if you have a training plan in place because you know exactly what you're looking for, right? And it makes it super easy for you to take trades and have confidence in your trades because you have that training plan written out, because you have that data gathered. Okay, I think there's going to be another example if we tap this fair value gap and continue higher. So if we tap this 4-hour fair value gap right here, right, this would be an example of external to internal liquidity. So internal liquidity in the form of this fair value gap, external liquidity in the form of this new swing high that's established right here. So now this fair value gap to this swing high would be our context area. Now let's see if there are any clean 1 minute inversion fair value gaps as this plays out. Okay. We chop around, we chop around. Nope, no clean inversions yet. This is the only inversion that I would be interested in right here, but we haven't inversed that gap yet. So we're sort of in a range after we tap that 4-hour fair value gap, and we're waiting for that SMT divergence to come in. I think it's around here. Let's check. Okay, you know, there's obviously an SMT divergence, but can we inverse this fair value gap? Okay, we come down again. Okay, let's see. There is a tiny one, I think. I believe there is a very tiny one. You can see NQ formed equal lows right at this 437 candle. But if we look on the 437 candle right here, we can see that ES failed to take out that low right there. So that confirms our idea that there is a cracking correlation between these two indices. Therefore, there is an SMT right here. Let's mark that out. Okay, now I'm waiting for a close above this 1 minute inversion fair value gap. Let's see if we get it. Actually, there's actually a better fair value inversion fair value gap we could use right here. So this might be sauce, this might be not. If a candle closes above a 5 minute inversion fair value gap, it's actually much more powerful than a 1 minute inversion fair value gap. Um, but you have to take this with a grain of salt. Don't be looking for 5 minute inversion fair value gaps all the time because you're going to miss out on very, very big moves. So it's more of a discretion thing that you have to build over time to spot those higher probability trades. So we have this 5 minute inversion fair value gap right here, and we're waiting for price to close above it. We have our limit order right here. We have our stop loss at that first presented, at that swing low right there, and we're targeting a 1 to 2 risk to reward. Okay, we can see if this plays out. Let's bring this a bit closer. Yeah, we're just waiting for a candle to close. All right. I may have missed the trade. Oops. Let's see. Let's see if price returns to our area. Let's see. All right, we're tagged in there. Our stop loss is right here, and our take profit is right here. Okay, let's see how this plays out. Where is our break even? Our break even is right here because that's the that's the 15-minute fair value gap where we could potentially reject off and continue lower. So that's the first opposing argument that we have. So that's where we're gonna break even. Let's see how this plays out. Boom. Great. Push to the upside. Look at that push. Very nice. Boom. We got break even. Okay, let's see how this plays out. Nice. Very beautiful flush to the highs. Look at that. And bang. TP hit. Right? Light work. TP hit. Super easy. And this is how you could have caught literally 2 trades right here using this super simple, effective trading plan. So, let's do a quick overview of what I just covered. So, coming into the day, right, we wanted to target this high, and then we had that fair value gap resting below. So, after we swept this high, our target was the fair value gap, right here. And after we hit this fair value gap, we expected, price to rebalance to that high. And if you can see, actually, I think this does continue to the highs. See, boom, right there. Bam, swept the high right there. So you can really see how effective this trading plan is just by using context, using a bias, using a narrative, using your entry, and using proper risk management. I know I didn't show really proper risk management here, but when I normally trade, I do have proper risk management. And I think that's pretty much it. I'm going to make this YouTube video public, and if you guys have any questions or if you want me to cover anything specific or anything that I missed maybe in this video, please let me know in the comments. Other than that, all right, thank you everyone for listening to me talk for these past couple minutes, and yeah, I'll see you next time.